What's going on, profiteers? Hope all is well. Another wonderful episode of Combos with your CFP here in beautiful Florida. Before we get started, as always, like, subscribe, share to our channel. We love the support. Also, check out our ETF, Let Be, L-E-T, B as in boy. So on the stock exchange. So whatever app you use to buy and sell stocks or ETFs, check us out. We also have our own investment app, Let Bob. You can check it out in the Google Store or the Apple Store. And Apple is killing it right now. But check us out. But today, wanted to talk about home prices and how this economic downturn is affecting home prices. Now, a report came out, and that report said over the past 13 months, the values of houses have went down. So this time last year, you sold your house, you made a lot more money than right now. So let's look at some information and see, as investors, when is the best time if we're looking to buy a house, because a house is your biggest and best investment. Even though I manage money for a living, of course, I have my own investment firm here in sunny Florida with thousands of clients nationwide, well, actually worldwide, as well as having a SEC registered investment firm. So we're definitely rocking and rolling, helping people. But I definitely tend towards investing in the stock market because over time, historically, stocks have made more money than real estate. But just from a pure throwing money perspective, we got to live in a house. We have to have shelter somewhere. It's better to have that $2,000 a month mortgage going towards a mortgage at $24,000 a year than $2,000 a month going to rent, where $24,000 a year we will never get back. And also, believe it or not, most of the time, because rent is so high right now, a mortgage is actually less expensive than renting. But let's look at the charts below. This is from the National Association of Realtors. Key highlights. Existing home sales retreated 2.4% in March to a seasonally adjusted annual rate of return 4.4 million. Sales declined by 22% from 1 year ago. So a $100,000 house that was sold 1 year ago, now you try to sell it? Not so much. $78,000, pretty big. The median existing home sales price dipped 0.9 from the previous year to 375,000. Mario, what you talking about, man? Now that has went up the past few weeks, which we'll talk about. But yeah, it's went down. An inventory of unsold existing homes rose by 1% from the previous month, or the equivalent of 2.6 months supply at the current monthly sales price. Meaning, people aren't as quick to buy a house as they was last month or the month before or the month before. I'm a new builder. I got 10 units on my new subdivision. They're not selling like hot grease anymore. It's going down. So as investors, great time to invest in a house. Think about it. We had a house last year, same house, same block, same street, that was worth about $425,000. Now today, being down by 25%, it's at $375,000. That's a buy. We know eventually the house is going to go back up. Now, historically, from a housing standpoint, houses go up by about 4% a year. Now, we have places like in California where things are crazy inflation-wise and cost of living-wise. We have places like Alabama, Mississippi, not so much, but historically about 4% a year. Our house at $100,000 next year should be at about $104,000. Compare that to the stock market, index fund, S&P 500, goes up on average about 8%. So $100,000 in the market this time next year is 8%. Now, yes, I do math for a living, but just from an easy mathematician standpoint, 8% growth is better than 4% growth. So yes, I typically recommend you want to be diversified, but in general, having money in the stock market over time makes more money than real estate. Historically. Now, of course, we have different anomalies, but historically, comparing apples to apples. But in this case, your house is your biggest investment because we have to shelter. So money is not being thrown down the drain renting. like money is thrown down the drain renting. So, long story short, we want to buy a house. So, this is a great time as investors. Now, the not so good thing, interest rates. Let's look where interest rates were and where they are today. So, look at the chart. As we can see, current 30-year mortgage rates higher than usual, right? They were January 1st, 2022, closer to about 2.75 to 3%. Now, closer to 6.5%, right? Double. So a house that's $100,000 is not $3,000 of interest we're paying each year. Now it's $6,500. Double. So that gives people pause when it comes to buying a house. It's like, well, yes, I could sell my house, but I don't want to get locked into something that's so expensive from an interest rate standpoint. Well, hold on, my friend. It's okay because we can refinance, and believe you me, 2, 3, 4 years from now, when interest rates go down, the banks will gladly refinance, get that origination cost, appraisal fee, and all other fees they have to refinance. So they will want to refinance, and you would too. So I would definitely say, if we're looking to get into a house, if we're looking to maybe downsize, we're looking just to, from an investment standpoint, period, invest, again, be diversified, recommend stocks in the market, also real estate. But this is actually the best time to buy real estate compared to 13 months ago. Now, what we don't know is how the economic downturn will hurt the economy, right? Unemployment probably is going to go up. We're seeing layoffs from a tech standpoint. We're probably going to continue to see layoffs. There might be a possibility that the value of houses may continue to go down. We don't know. Nobody can really predict the bottom. It's not like I bought it on this day at this time, the bottom of the bottom. Nobody gets that right. It might be a time to look into buying a house because things are a lot less expensive right now than what they were 13 months ago. Last thing to think about. We did look as of end of March, now end of April into early May, spiked up, right? 383,000, the average Florida home. Right? So that's Florida because we are in Florida. In totality, it has been a spike in homes over the past few weeks. Now, why is that? Is that because more people buy in the summertime? Well, typically they do, right? Because you think about people with a family, they're moving, they want to wait until the summertime to buy because they don't want to have their children go out of school, right? So that's understandable. So maybe August, September timeframe, things might go down as people are settled. I do not know, but what I can say is that in totality, it's definitely better to buy a house now compared to 13 months from now. And as a seller, if you want to get out, stop waiting, get out, and then use those proceeds to buy something else, preferably at a lower price. But I hope that's more game I sprinkle. If you have any questions, comment below. Like, share, subscribe. Let me know what y'all think. I got a book that's about to be published next month. So excited about that, man. Hopefully we're a bestseller. Hopefully. Anyways, y'all, as always, long-term investors the wave. Let's make some paper profits together, y'all.
Making the money mistakes, make a payment on your bills and you still late, yeah. Pay for profits to help you seek change, and you just wanna get paid, yeah. Tired of making no money mistakes, make a payment on your bills and you still late, pay for profits to help you seek change, yeah. Cut the show and just listen. You wanna feel empowered by making money decisions. Residual by the hours can get you a better living. Bitch at the check, you know, and it could be different, you know.